Hi there. Walgreens Boots Alliance is doing quite great. The stock price has declined by over 24% in the last 5 days. This happened because their earnings, their adjusted earnings, were lower than expected, and also the future outlook has been lowered. And now, as you can see, the market cap is about 14 billion, and a big surprise is that they keep paying this huge dividend, over 8%. 8.27%. This is quite amazing, especially for dividend investors that want to take advantage of this company. But before investing in this company, you have to know some important things, especially the risk. Because you have to ask the question, is this the bottom? As you can see, for the last 5 years, the stock price has declined by over 78%. If you look at the longer period, you can see the worst performance. The stock price is back to 1997. So over the last 27 years, you are still down 4% if you had invested in this company at the beginning. Of course, you also got some dividends and they went up over the years. As you can see here, their past history. Their dividends have continued to go up. This is good. But we have to ask the question if this dividend of 8.2% or $1 per share is sustainable. And of course, if Walgreens can turn around. If the management can turn this business profitable. If they can do that, then the stock price can rebound back to $50. That can also happen. Or $40. If that happens, you have a 3x on your investment. So if you look at their latest results for the Q3 2024, you can see their performance. That their adjusted earnings per share were down over 46%, and they lowered their guidance, adjusted earnings per share, to $2.80. This reflects challenging pharmacy industry trends and a worse than expected US consumer environment. So the business is doing quite bad at the moment. Now, what's important is to look at its segments. As you probably know, this company, Walgreens, has 3 segments: US retail pharmacy, international, and US healthcare. As you can see, their sales went up for all their 3 segments. In the last quarter, year over year, the revenue has increased a little by 2.8%, as you can see here, for international. For retail pharmacy, US retail pharmacy, the revenue has increased by 2.3%. This is good. And for US healthcare, the revenue has increased by 7.6%. So this is great. Now, the problem is, as you probably have seen, their operating income, especially adjusted operating income, which has decreased by almost 50% for US retail pharmacy, as you can see here. For international, their adjusted operating income has decreased from 208 million to 175 million. This is also bad. And for US healthcare, they currently have no profits, but their losses have reduced. And this is great, as you can see. Last year, they had a loss over 522 million, and now they have a loss of 220 million. This is good. This is an improvement. If they can bring this segment profitable, then that will be a plus for shareholders, because they will get their dividends and the stock price will move up. Now, the question you have to ask yourself is that dividend over 8%, as you can see here, 8.2%, if this dividend is sustainable. So let's take a look at the numbers. As you can see, in the third quarter, Walgreens paid 1 billion in dividends. As you can see here, cash dividends paid, 1 billion. 1 billion. Now, if you look at their earnings, especially operating earnings, you can see here 111 million. So you just have to compare their operating earnings. Forget about their final earnings. Look at operating earnings. Compare these earnings, 111 million, with the dividends they paid of 1 billion. So can you see the imbalance? That they make less than they pay in dividends? I hope the answer is positive. And this is the risk, because this dividend of 8.2% may be reduced if Walgreens Alliance doesn't improve its operations to improve their profit margins. Now, if you look at their guidance, here you can see that their adjusted earnings per share are expected to be between $2.80 and $2.95. As they are paying $1 per share in dividends, this might be enough if they can deliver these earnings. This might be enough to pay that dividend, high dividend. But if you look at their cash flow, the way their money goes, you can see that they made last quarter, the third quarter, 111 million in operating earnings and paid 1 billion. You can also see the cash from operating activities, a loss of 314 million. And its capital expenditures were over 1.1 billion. And this is a huge question mark. How are they able to pay this huge dividend, over 1 billion? Well, they sold more assets to pay this dividend and also their debt, the interest they have to pay on their debt, which is over 100 million, as you can see here, 113 million. If you look at the total debt, you can see short-term debt of 1.5 billion and long-term debt over 7.4 billion. In total, almost 9 billion, almost 9 billion in debt. So if Walgreens Boots Alliance faces more problems in the future, their earnings, as you can see here, keep going down, then also that dividend may be reduced. For sure, if their earnings, operating income, adjusted operating income goes down even lower than this level of 500 million for US retail pharmacy and for the other segments, if those earnings go down, also the dividend will be reduced. They've already done that. The dividend has been reduced. In 2023, the dividend was 48 cents, and then it has been reduced to 25 cents in 2024. And this may happen again. The dividend might be reduced to 15 cents or 10 cents. Or they might cut it all so that they can turn this business around to survive. If they have higher expenses than expected, plus a bad consumer environment, then they'll be forced to cut that dividend. So that's why the risk with this company is quite high. Because if they cut the dividend or reduce it from 8% to 4%, you will see another decline in the stock price. Something like this, a decline over 20%. This can happen again. Of course, if you believe in the future of this company, the new management in place, the new CEO, that they can turn this business around, that the pharmacy industry will improve over the long term, then at the current level, Walgreens may be a good buy. Especially if the stock price bounces back to, let's say, to $40 or even more, you have more than 2x on your investment, almost 3x. That can easily happen. But in the short term, you might see, as I said, because of that huge dividend and lower earnings than expected, you might see another decline in the stock price. And if you are planning to make a quick profit in the short term with this company, be aware of this dividend because the risk is quite high. And especially their debt, huge debt of almost 9 billion, 7.4 billion and 1.5 billion short-term debt. The market cap is about 13.4 billion. So that debt is another problem as interest rates are quite high at the current moment, as you can see here. Interest rates are about, over 5%. If they go higher than 5%, that will be another problem for Walgreens. So, for the moment, Walgreens is doing quite badly. You can also look at their presentation. US retail pharmacy performance impacted by challenging pharmacy industry trends and a worse than expected consumer environment. And that's why they also lowered their guidance. So it's up to you if you want to invest in this company, Walgreens Boots Alliance, to take advantage of this huge decline over 76% from 2022 and get this nice dividend over 8%. You have to be aware that this dividend might be reduced in the short term, especially in the short term, because of lower earnings than expected. And also, this company have other problems such as huge debt and competition from Amazon, CVS, and other retail companies. That's why you have to put in balance the risk and the reward. When you see this massive decline, it looks like a great bargain. But things can get even worse. That's why you have to be careful when you invest. If they cut a dividend or they reduce it, that might be a good entry point if you buy at that moment. And if you trust the management that they can turn this business around. That's why don't rush to invest right now. Or maybe you want to take advantage. Invest a small portion of your money and then see how things will go. If they can get better or worse. So that's it for this video, and if you have other questions, please let me know in the comments.